So hello everyone and welcome to day 14 of our marine cargo insurance course. So today we are going to discuss some very important but often misunderstood special considerations in marine cargo insurance. These are risks that are not always covered by your standard policy, and understanding them is crucial for complete protection. We'll talk about war, strikes, riots and civil commotions, often called WSRC, and also theft, pilferage and non-delivery or TPND. By the end of the session, you will know why these risks are treated differently and how you can get coverage for them. So let's start with war, strikes, riots, and civil commotions or WSRC risks. The first thing to understand is their standard exclusions. These types of events, like actual wars, civil wars, or large scale strikes that stop port operations or riots and civil unrest, are specifically and clearly excluded from your basic marine cargo insurance policies, whether you have ICC A, B, or C. And why are they excluded? Because they are considered catastrophic. They can cause massive and widespread damage, and they are extremely difficult for insurance companies to predict, control, or even properly estimate the risk for. This leads to the question that why separate? Because of their unpredictable and large-scale nature, these risks need very specialized handling by insurance companies. They require different ways of assessing the risk and setting the prices, which is why they are typically covered by separate or additional clauses not built into the main policy. So, if these WSRC risks are excluded from standard policies, what's the coverage solution? The good news is that you can get coverage for them. You do this by adding separate additional clauses to your main marine cargo policy. These are called institute war clauses, that is cargo, and institute strike clauses cargo. The institute war clauses cargo specifically cover losses or damage caused by things like actual war, civil war within a country, revolutions, rebellions, or any hostile act by or against a country involved in a conflict. Also, if your cargo is captured, seized, or arrested or detained because of these war related dangers. And importantly, losses caused by war weapons like mines, torpedoes, or bombs. The Institute strike clauses cover losses or damage caused by actions of strikers, workers, or are locked out, or anyone involved in labor disputes, riots, or civil commotions. This clause also extends to cover the acts of terrorism or any acts by individuals or motivated by political, ideological, or religious reasons. Just like your main policy, these additional clauses also have their own specific exclusions. For example, they typically won't cover losses caused purely by delay, even if the delay was due to a strike, or losses due to the natural deterioration of the goods themselves. So, when are WSRC clauses crucial? When should you seriously consider adding these extra precautions? So they are absolutely vital if you are shipping to or from politically unstable regions of the world where conflicts or unrest are real possibilities. They are also important if your cargo will transit through piracy prone areas. While basic piracy is often covered under the broader ICCA policy, these war clauses would cover more specific acts of war or terrorism by pirates, for example. And finally, if you are shipping high value cargo, that could be a target for looting or damage during a civil unrest. These clauses become very important to protect your investments. So let's move on to the second special consideration, that is theft, pilferage, and non-delivery or TPND risks. These are common concerns for cargo owners. It's helpful to understand the distinction between these terms. Theft means the unlawful taking of property. This could be something big, like an entire container being stolen from a port. Pilferage is a type of the petty theft where usually small items are taken from a large package. For example, a few items might be missing from a carton, but the rest of the carton arrives. Non-delivery means that an entire package or the whole consignment simply goes missing. It's not necessarily proven to be stolen, it just never arrived at its destination. Understanding these differences helps in clarifying what happened and how your policy might respond. So let's see how the TPND is covered under the different institute cargo clauses we discussed in the day 5. For ICCA, which is the all risk policy, theft, privilege, and non delivery are generally covered. Remember, all risk means it's covered unless it's specially excluded. So, if your policy does not list theft as exclusion, it's included. However, for ICC B and C, these policies do not inherently cover theft, pilferage, or non delivery. This means if your cargo is simply stolen or goes missing, it won't be covered unless that theft or delivery, non-delivery, was a direct result of one of the named perils listed in the in your policy, in your B or C policy. For example, if the cargo is stolen after the vessel's capsized due to a storm, a named peril, then it might be covered. But if it's just stolen from a warehouse, it won't be. So, if you have ICC B or C policy and you want protection against theft, pilferage, or non delivery, you often need to get a specific endorsement. An endorsement is simply an official addition to your policy. You would ask your insurer for a specific theft, pilferage, or non delivery TPND endorsement. This endorsement then extends your policy or specifically cover these risks, even though they are not included in the basic ICC B or C clauses. So even with the specific endorsements, there can be common limitations or the conditions for the TPND coverage. Your insurer might require specific security measures. For example, for very high value goods, they might insist on sealed containers or real-time GPS tracking. If you don't meet these requirements, your claim might be affected. For the non-delivery claims, you'll almost always need a proof for the non-delivery, such as a formal acknowledgement from the carrier that the goods were never arrived. And finally, TPND coverage might come with the higher deductibles, meaning you may more out of the pocket first, or specific sublimits, which means there's a maximum amount the insurer will pay for the particular type of the loss, even your overall policy limit is higher. So when is TPND coverage crucial? When should you make sure you have this specific protection? It's absolutely vital if you are shipping high value, easily privileged goods like electronics, mobile phones, or luxury items such as jewelry or designer clothing. These are the attractive targets for thieves. It's also crucial if your cargo is transiting through areas known for high theft rates, whether it's a particular port or a warehouse or a specific road route. And finally, it's important for any goods where complete delivery is paramount. If even a small shortage of the missing package would cause significant disruption or the financial loss to your business, then TPND coverage is a must have. So that concludes our session on these important social special considerations in a marine cargo insurance. Understanding these risks and how to cover them is key to truly comprehensive protection. Now, I'd love to hear your thoughts. In today's global landscape, considering all the headlines we see, Which of these special considerations, war, strikes, riots, excluded commotions, WSRC, or theft, filtrage, and non-delivery (TPND), do you think is a more pressing concern for cargo owners and why? Please share your thoughts in the comments below. Thank you.